Hello, my name is Raitis and you're here at Fairwell Total Return Investing. And in today's video, we're going to talk about how to anticipate long-term reversals with the commitment of traders report and the open interest. And also we're going to do our weekly outlook in this video and go over all the major asset classes. So with that said, let's dive deep into the weekly outlook. Before we go into the video, feel free to join my Discord channel where we post the weekly outlooks, commentaries, and also some trade ideas. This was the trade idea from last week's Thursday where we took a long on YM and the analysis played out beautifully. So if you want to stay up to date with all the with the most exclusive market insights, then feel free to join my Discord channel. I hope you will find some valuable information right there. With that said, let's dive deep into the analysis, and we always start with DXY. You can see from the monthly time frame, these are my monthly PDA levels. We're currently trading at the old highs. Market retraces back into the range. On the weekly time frame, we have this weekly inversion fair value gap and also this weekly bearish order block where we have the mean threshold where market sold off on Thursday. Thursday very nicely. And we have the low, then we have the weekly inversion fair value gap, and we have the reclaimed weekly fair value gap busy right here, which we could revisit this week if we're gonna see more downside this week. With that said, we took out the rejection block, market traded lower, rejected, failed to stay above this bullish down close candle. Now we're trading at the consequent encroachment of this weekly order block, which is a key level. If this week really can close below the mean threshold of this bullish weekly bullish order block, then we could really see some more downside trading into this sell side liquidity pool, and we could even revisit this weekly fair value gap right here, or even this sell side liquidity pool, because we may have a major long-term reversal underway at this high right here. T-note futures, our analysis from last week played out beautifully. We reached our target objective where open float liquidity resided from this retail head and shoulders pattern right here, break above the trend neckline. Market fakes out traders to the upside, reverses, and takes out these sell stops. Beautiful analysis, and now market trades higher on the 10-year Treasury T-note futures and on all the other respective T-note futures as well, because DXY is seeing some massive downside. T-note futures after Thursday reversed higher, and now we anticipate higher prices because we're bearish on dollar. We saw a nice close above the low of this candle, so we hopefully see a sustained run. What I don't want to see for a bearish trend is that we reject after this low and trade back deep into the range and start to consolidate. That would be again a consolidation characteristic and consolidation profile, and we don't want to see that. I think we finally made it out of this January and February shenanigans where we only see consolidation and trapped order flow, but we're still kind of hanging between the mean threshold of this weekly order block, bullish order block, and the low from this bearish order block. With that said, on the daily time frame, I really don't have any daily PDA race. Of course, when Monday's candle closes, we could see a daily fair value gap right here. This could be a interesting level to watch out for Tuesday. So, but we're gonna see what Monday's candle does. And T-note futures, I expect a run higher from so this is basically a daily breaker. Once we trade above the up close candles, this becomes a bullish breaker, And we have also a daily order block, which I want to see market trade higher from. We should not invalidate the consequent the mean threshold of this daily bullish order block, so I don't want to see any closures below the 50%. And now let's talk about long-term reversals. So I already said I anticipate downside on DXY. Now with Euro, I'm going to show you how I use fundamental analysis to anticipate long-term reversals. We're here at barchart.com, and we have the Euro futures market, basically Euro USD, it's the same thing. And you can see we're here on the weekly time frame. And right here we have the open interest, and down here we have the commitment of traders report, and I only have the commercials outlined right here. What you can see right here is that every time open interest drops heavily, we see a major turning point or a quarterly shift in the market. You can see open interest drops massively right here. We form a swing high afterwards. We form after we saw a massive drop on open interest right here, market reverses higher, forms a swing low. Same thing goes for here. Market, we see a drop in open interest. Market trades into the bearish order block coupled with a fair value gap, forms a short-term swing high. And after we take out sell-side liquidity again. Next, again, we have a drop in open interest right here. Afterwards, a few weeks afterwards, we form a swing low. And this goes on and on. Open interest drops, we form a swing low. Open interest drops, we see another continuation, retracement, and then continuation higher. Open interest drops, forms a major low right here. And basically, we traded below a sell-side liquidity pool. Institutions are offsetting their short positions, so are distributing. That's why we saw a drop in open interest below the low. Now we anticipate a reversal from here to target buy-side liquidity again, coupled with the fact that open interest is net long. Historically, we have never seen such a net long position for the last 3 years. This is also a major key indication that the commercials, so the central banks in this case for the currency, are net long, and we can see major upside on euro going into the next weeks. We also have technical analysis playing to this fact. We have the weekly propulsion block, which I'm really watching out for. This is the order block, and now we have the propulsion block. And the mean threshold of that. I would outline all these levels and watch out, which I would really pay close attention to this week. And of course, the volume imbalance, and on the daily time frame, we have a volume imbalance coupled with an order block. So, and also a breaker right here run on the sell side. So this would be the breaker. And also we have this balanced price range right here. So market could see upside from here, kind of this level, volume imbalance again, order block, and we could see a rally higher from there. So this is my anticipation for dollar, treasury note futures, and euro. So I'm bearish on DXY, bullish on T-note futures. Even if they are still inside a consolidation, we have no real clear order flow on T-bones, because we could easily stay inside this range for another couple of weeks. But dollar looks heavy to the downside. Euro, I'm really bullish, and pound even more bullish, because Euro GBP is right now it's inside a consolidation, but I think market could retrace higher from this order block right here into the weekly fair value gap, and then see downside. So we could see something like this playing out before we see another impulsive leg to the downside. But I'm fundamentally bearish on Euro GBP. We have this major low I think we could really attack this sell side liquidity pool. That's why I'm heavily bearish on Euro GBP, and if Euro is bearish, Pound has the strength, then GBP USD should see more upside, and this is what we are already seeing. Even if Euro GBP is inside a consolidation, so we have this weekly fair value gap, and we have this is the order block, this is the propulsion block. So let me extend this. So this is the high of the weekly propulsion block, and I want to see a rally higher going into the next week, possibly from there, and we should see explosive movement to the upside. If I'm bullish on pound, I do not want to see the market close with a daily candle below the 50% of this BISI, because this is the protocol for a BISI. We don't want to see the market close below the 50% of a daily BISI. So this is the anticipation going into the next week. With that, we have currencies covered, interest rate markets covered. Now we're going to analyze the futures. So for ES, my monthly levels, we have also a propulsion block which we're trading at. Now weekly time frame, I know a lot of levels, but you can see this is the monthly, weekly mean threshold of this order block. 2 down close candles, market rallies higher. Last week we closed above the bearish candle, which makes this a propulsion block again. So I really see bullish market structure on ES. And then we have some more buy side targets outlined. We have the weekly swing high, rejection block, and all-time highs. So these are my targets going into the next week. We could see some small retracements into discount. For example, the propulsion block to then trade higher. But as I said already, I won't participate in Monday's price action. We have bank holiday today. It's President's Day, and even if we have some news at the end of the day, I will focus on Tuesday, Wednesday, Thursday, and Friday. All are good days to trade, except Wednesday could be a little bit tricky because of the FOMC meeting minutes, but the rest seems all pretty good to me. That's why let's continue with the analysis. Let me look at my checklist. Did I have everything? Yeah. Then we can go into the daily time frame. We closed above the volume imbalance and we hit our target. Sorry, our target is the rejection block from last week. So I think we can reach up into that by this week for sure. So this stays as a target from last week. The target for this week is even the all-time highs. I think we can get back to all-time highs again pretty soon. So that's the anticipation. I'm bullish for ES. Again, we closed above the sell side liquidity pool, so hopefully we can see a sustained run higher. And after these run on sell side, we see displacement higher. Of course, market consolidated, and then, but now we're seeing sustained runs above buy side liquidity pools. Yes, we're still inside a consolidation for as a daily market profile. It's still inside a consolidation. We have to qualify if this is a sustained run on buy side liquidity. If market doesn't reject lower and trade back into the range, again, we have also the ABC right here. So I don't want to see market close below 50%, which is basically below the weekly fair value gap again. Then I'm bullish for ES definitely, but if we see markets trade back into the range and close below the weekly fair value gap, then we're still inside a consolidation. We have to be aware of this fact. Again, my target is the not the daily rejection block, but the weekly all-time highs coupled with the weekly rejection block. Now let me switch to my NQ analysis for this week. And NQ is really, really strong. It's the leadership market, I can tell you that already. From a monthly standpoint, again, these are my PDA levels. These are my weekly levels, a little bit more on NQ, but you can see me rallied after taking out the sell-side liquidity below the rejection block. Market trades higher. Last week we closed above this up-close candle. And now I anticipate further continuation to the upside. My weekly target for NQ is the weekly high buy-side liquidity pool. And what do we have else? We traded above the rejection block, which was the target for last week. Market closed above the daily volume imbalance, and we closed above the sell-side liquidity, buy-side liquidity pool, and we're seeing a sustained run. So NQ is definitely bullish. We already hit the daily fair value gap CB high I outlined yesterday. With the open, we got higher. So I really think we could see some massive upside. Again, this is the busy. I don't want to see market get below the 50% on a closing basis on the daily time frame. This would be my invalidation criteria for longs. With that said, upside on NQ. Right now we're at a heavy premium, but I will buy any institutional sponsorship from a discount level if we see some retracements. But for now, this looks heavy bullish and I don't want to really chase price. I will wait for a good opportunity. I think this week will be a week where we see one or two good opportunities and then you have to capitalize on that. Otherwise, you probably have to be more conservative than last week. Last week we had 3 back-to-back wins. So yeah, very, very nice. I think this week could be a little bit more tricky. But let's see. Again, weekly market structure is very nice. We have this propulsion block, and on the daily, again, I already talked about this stuff. We have the closure above the buy-side liquidity pools. So it looks like we're breaking out of this consolidation, and NQ is really the leadership market, and my target is the all-time highs again. Now YM is a little bit tricky. YM is still inside a consolidation. As you can tell, we still have trapped order flow on this asset between the daily fair value gap and this daily fair value gap. So we're basically stuck between this range. And we have a consolidation profile. So this week, I really want to ignore YM at all costs. If we close above this up close candle, this could be a propulsion block, order block, propulsion block, if market is able to close above this down close candle. Now, if you just compare the daily candles from last week, Friday bearish on NQ at YM, NQ very bullish, ES consolidation, doji candle. And again, we saw 2 down close candles in the last 3 trading days of the last week on YM and Q. So only up days in the last half of the week from last week. ES saw like 1 down close candle, 1 massive bullish candle, and then the consolidation day on Friday. So relative strength is on in Q. And now the last asset is gold. I think gold, again, our target is still 3,000 for the futures contract. We barely reached the standard deviation from this range we outlined from last week's weekly outlook. We're back at the daily order block high. We're reclaiming this PDRA. Markets could still see upside from this level. Otherwise, I expect a deeper retracement to then trade higher again. This is a low resistance liquidity run, which is really, really good. I think gold still has some massive potential to the upside. and we could continue a rally from the daily or block high or retrace into the weekly fair value gap. Yeah, with that said, this wraps up the weekly outlook. So I hope you found some valuable insights again. Um, and I hope you could learn something about the commitment of traders report coupled with the open interest and how you can anticipate long-term reversals with these tools. And I hope this was insightful. We will see us with an evening commentary for today, where we will talk about how we will attack Tuesday's price action, and we will reflect on what Monday did. But I don't expect any significant moves today because we have the bank holiday for the US dollar. So with that said, I hope you found this weekly outlook insightful. Join my Discord channel in the link in the description below this video, and we will see us today in the evening. Stay safe, trade safe, bye.